Hello there, this is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk about some economic data which was announced today, which there was a lot of anticipation for it, with ideas that maybe we can see some hard facts of how this tariff and trade war is impacting the economy and what the announcement actually was and what that means now. As well as that, the implications, of course, to the market and how the market has felt from this announcement. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With it out of the way, let's get started. So, yes, there was so much anticipation for this announcement today, okay? Because obviously we had the US CPI, Consumer Price Index, and it's a major indicator for inflation in the US for goods. You know, basically measures the price of a basket of goods and the change in prices. It's a key indicator for inflation. So obviously the market and everybody was speculating that this event could be massive, could finally see that tariffs are having a big effect on inflation. And the answer is, tariffs, do they affect inflation? Answer is, well, not yet, because US CPI year on year was announced 2.3% versus 2.4% expected, lower than expected, but also lower than the previous reading. As well as that, month on month, you know, the month we could really see the real change. We can see the change within the month. Month on month was announced to 0.2% versus 0.3% expected. So again, lower than anticipated. Lower than anticipated. However, I would like to point out, though it is lower than anticipated, it's still slightly higher than the previous reading of minus 0.1%. Now, here's the thing. This is why, like I say, the market always, we're anticipating this to be real signs of the potential negative impact on the market and the economy of tariffs. But at the moment, this is actually showing this is the lowest annual increase since February 2021. Now, I don't know how long you've been trading for, how long you've been in the market for, but we all know 2021 obviously was the tail end of COVID, and we're all beginning to slowly recover. And it was the lowest annual increase since then. And that was just before the dark times of when 2022 took effect, when we did have a global inflation crisis. Now, I remember that very well because I covered it lots of times throughout that. Now, I'm not saying at the moment, we'll talk about this, and it's an open conversation, people. So feel free to share with me your views and your opinions on this as well. But like I say, often, you know, that's often the calm before the storm, maybe. But anyway, this was really key, important data, because realistically, this was the first hard fact data we've had since President Trump's Liberation Day. So again, like I said, there was much anticipation in the market that this was really going to illustrate that tariffs are going to increase inflation. But at the moment, it's not showing us this. So then, of course, I then have another question to ask. Again, this is open to you all. Is this, or was it all along, this tariff threat, a false fear, or are we seeing a delayed response? Are we simply seeing a delayed response that we are not seeing the impact of tariffs yet on inflation because it's only been less than a month? Or, and this is another question I want to ask, and this is something else we're going to find out. We'll talk a little bit about it later. Or is it more of a case that maybe people aren't buying so much because they're worried? We'll talk a bit more about that. But anyway, needless to say, this obviously is positive data. And it leads to another issue, another thing which the market will then, of course, obviously speculate upon. And that is the fact that, of course, this is going to put more pressure on the Fed. You know, they're already under a lot of pressure by analysts, and more importantly, by the big man in the White House himself, that they should cut interest rates. They should cut interest rates. And they've been holding steady. Don't forget of all the words being said against Powell from President Trump. You know, he's a loser, he's too slow to react. And to be fair, a lot of people have criticized the Fed for acting too slow, like they did back in 2021, when again it was at, you know, low levels like we are seeing it right now, or the lowest growth, lowest increase since we're seeing it now. So it does ask you that question, you know, will this put more pressure on the Fed to actually act? Will they start to increase interest rates? Or are they going to wait for inflation to rise? Anyway, needless to say, this is more good news for the market, who's been on the back of an incredibly exciting day yesterday. Very exciting day yesterday. As we all know, there was a lot of anticipation, a lot of excitement yesterday at what happened. Because, you know, like we said, China and US reduced tariffs against each other for 90 days. For 90 days, they did. And as well as that, it's also been announced today, the sign of good faith and the sign that they want to progress with this positive talk and positive negotiations, that they are indeed going to lift the ban on Boeing plane deliveries. Because with this whole tariff trade war, when it kicked off and when it started, they banned all deliveries of Boeing planes. So again, further good news that the trade thing is moving forward. Okay, so that is again good news, right? It's shown a friendship, that they are progressing and moving forward. So all is good, right? Yeah, this again is the question I want to ask. And again, please say hello and please say what you think. What you think. Please tell me your opinions on what you think about this. Because, yes, we've had two very positive days. Well, three technically. Obviously, we had last week with signs it's not a done deal yet. Everybody got excited to think it was a done deal. That the UK had done a trade deal with the US. Still a few things to be, you know, but it's progressing. And in reality, that's when we've all found out actually was processing, but still encouraging nonetheless. Then, of course, obviously, we've had China and US have very positive talks at the weekend and decided to cut each other a break on the tariffs for 90 days. But, as well as that, so of course, obviously, then we've had a really good, you know, cooling CPI reading today, which again is also really positive, really good. However, there's a couple of things which is still bothering me. Okay. First of all, I know for a fact, well, not for a fact, but I am pretty sure that the US-EU negotiations were going to be a lot tougher. And as well as that, to reiterate what I said earlier on, is this just a delayed effect, or was there no effect or no fear in the end at all? Because Powell also last week, he also said, he emphasized this, in fact, last week, that the tariff shock hasn't hit yet. Now, again, I can't help, I've already mentioned this, I can't help but see in some ways maybe this is mirroring, when CPI followed to the lowest growth back in 2021 before the inflation crisis started. I can't help but think maybe this is mirroring it slightly. Maybe it is the calm before the storm, because at the end of the day, despite the deals, it's still 30% on China. China's still got 10% on US goods. There's still 25% on imported cars, apart from 10% for the UK. There's still 25% on automobiles and light cargo trucks. There's still 25% on steel and aluminium from all countries apart from the UK. There is still 10% baseline on all countries. That has not changed. It's just the headline noise has changed. Just the dramatic tit for tat, so to speak, tariffs on China has changed, but nothing really has changed that much. Things are still proceeding this way, are still going to get more expensive. Anyway, for now, the market is holding steady. So let's have a quick look at how the market is opened. It's been open now for 41 minutes. Let's have a quick look at how it is at the moment. Like I say, obviously yesterday was full of excitement on the back of that. And this is the S&P 500. We can see, obviously, with that cooling CPI data as well, which is cooling, it's still continuing that momentum at the moment. Not as exciting as it was yesterday, but it is still currently trading up at 0.61%. On the daily, we've got a longer picture of it. We can still say, like I say, it's enjoying two very good indeed trading days. And like I say, it's way above currently a 200-day moving average. If we look at the NASDAQ as well, okay, the NASDAQ as well, again, same picture we're seeing at the moment, up currently 1.07% on the day. Again, not as exciting as yesterday, but still enjoying a bit of positivity. Same, we can say that as well about the Dow Jones national average, slightly down from yesterday, but yesterday it did move nearly 1,000 points, but still, again, looking positive for the day. And we can say the same for the Mag 7 as well. Tesla is still up for the day, up positive in the green. Meta as well, up 1.64%. Microsoft, again, up 0.14. Amazon, up 2.48%. So that's enjoying the good news over the last couple of days. Alphabet as well up. Nvidia, probably the best performer out of the Mag 7 currently at the moment, currently up 4.41% as well. And finally, Apple up tepidly, only a little tepid, only room temperature, 0.15%. Again, like I say, don't forget, these are live shows, so you can ask me questions or talk to me. Or ideally, what I'd really like to hear is your opinion. I like to hear what you think and what you're trading at the moment, or what you believe is moving the market, etc. I really like to hear your opinion on that. So don't forget, and like I say, it's live. So if you're watching me on YouTube, just say hello, etc. on the comment section. Don't be scared. Anyway, we talked about the market. Now, what I want to do a currency update. So let's look at some currency update, because yesterday it wasn't just the stock market which was doing really well. Obviously, the US dollar had a big comeback. Don't forget, the dollar's been under a lot of pressure over the last couple of trading sessions. But yesterday it had a better day, which is great. Good for the greenback. Let's start off with the euro, though. Again, it's a 30-minute, slightly tepid again, because, like I say, there was so much excitement yesterday. Euro's holding steady. Nothing really dramatic with that. Same with the British pound. Again, managed to recover a little bit during the European session, currently trading at 132, so not as bad as yesterday. So a slight recovery, not massive. That's how it was performed yesterday. This is how it's recovered today. Dollar yen, same thing as well. Obviously, yesterday Dollar had a very good day across the board today. A little bit more tepid on that, which you've come to expect. And you can see that with the dollar index as well. Still trading above 1.101, which is good, but not as impressive as it was yesterday. And finally, it wouldn't be one of my broadcasts, obviously, if I didn't speak about gold. Yeah, so gold came under a lot of pressure yesterday, because of the good news, which meant maybe a lack of safe haven attraction, but also because obviously dollar strength at the same time, which hurt my precious metal, the yellow metal, who I absolutely love. However, managed to still maintain it around $3,235.36. So not a complete sell-off. It's still way above that key area of interest for me of $3,155. On the other side of the yellow metal, though again, yeah, we are getting some positivity. I think the underlining route, there is still a little bit of concern there, which makes the yellow metal still shines bright. This is why we didn't have a complete reverse. And plus, even with that good inflation reading, that low inflation reading, is still holding steady today. Anywho, that's what's happening so far currently in the market. Don't forget, of course, like I say, this is indeed a live show. So, I don't know, got a comment. Hey, I got a hand wave. Excellent. Hello there. Hello, how you doing? Don't forget, like I said, this is indeed a live show. So you can talk to me anytime you wish, or just simply say hello or ask me questions. Or more importantly, what I really like is hearing your opinions, hearing what you think. Tell me what you're trading, what you're looking at. What do you think? Do you think, this tariff inflation fear, which we'd all been building up in our minds, was it false? Should we have been that scared all along, or was it not really happening? Did we kid ourselves? What do you think about gold? Where do you think gold's going to go? You a gold bull or a gold bear? Do you think we've seen gold hit the highest? Or is gold on its way down? As well as that, of course, don't forget, if you watch me on YouTube and you like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time we're going live. And if you like this type of content, by all means, give me one of these. It's nice to know that you like what we do. On another thing, a lot of people I've noticed do go back and watch the recordings. That they missed the live shows, so they go back and watch the recordings, which is great because I appreciate any type of support whatsoever. I really do appreciate it, which is awesome. And if you do have a question or a comment, put it in the comment section below. I will see it and I will reply to it next time I go live on air, which is every day. And in fact, I did indeed have a comment yesterday on the YouTube section from Mr. Salman Mohammed. And it was a very nice little message. I just want to say I really appreciate that message. That was brilliant. Thank you ever so much for that. It says simply a lot of heart emojis and continue. So I hope, I think obviously he appreciated the broadcast. So I'm hoping he's watching it today. So I really appreciate it. So it goes to prove the fact that I also go back and watch, look out for comments on the recordings as well. So bear that in mind. Okie dokie. If there is no questions, not a problem. If there is no questions, in that case, it leaves me to say, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.